All right, what's up, guys? Anthony here, Special Analysis. Welcome to the video. Doing a quick recap here on this morning's live session. The indices were not playing super nice earlier this morning. They did get some movements out of them later in the day, but just really we were in this uptrend. We fell out of it. We just did a bunch of ugly things for the majority of the day. I mean, if you're really reading the price action super close, could you have navigated this, for small scalping opportunities? Yeah, but that's not really what I'm super about because that creates a lot of risk. And, for me, my goal is my traders to build confidence. And the way they build confidence is by taking high quality trades. Now, that doesn't mean every trade works, right? Doesn't mean that I'm always right. It simply comes down to we wait for what hits the checklist in order to have some consideration. So we had two commodity plays today. The crude oil play was purely my interpretation of price action. Did it work out? It did. Was it really the checklist that I really prefer folks to stick to, especially if they're not super comfortable being aggressive? No, but I felt like I had a good read on the market. I shared it with my clients. They expressed with me, some of them, that they made money. So let me walk you through it real quick. This is light sweet crude. And it was this morning, okay? We were in this downtrend here. We placed an overnight high. We were impulsing and correcting to the downside. We put a low in around 7:30. I was at the desk having my coffee as I witnessed this. I felt very confident that this was at least going to probably provide us the opportunity to try to retest this area overhead. And by retest, I'm talking about, this or maybe even a couple candles. And you could see, just kind of consuming that candle there, that would be notable resistance, right? We clearly fail from here. Now, I was not awake at 3:39 in the morning. I did not witness this, so I wasn't really able to interpret the price action as well as I was here, simply because I witnessed this happen. I was able to see it in real time and feel the fact that I was confident things were going to turn around. We popped up to the pivot here. We consolidated. We pushed up. We pulled back. This, to me, was where I felt fairly confident we had a chance to take a push into this overnight high. And I saw a few things that I felt fairly comfortable about. I was fairly comfortable that we had placed a higher low, right? So this is our higher low. Okay. I went off the top here. I made a very clean, nice pullback. I have rising support. I have pulling back resistance. All I'm waiting for is a break, right? And that break happened right here. Now, some of you are going to go, yeah, but the VWAP's right here. Yes, we totally talked about the VWAP being probably the greatest risk to this setup. And my comments were very simple. If we break here, which we did, and if we break the VWAP and hold the VWAP as support, which was right here, there's a fairly decent chance that we push up into the overnight high. Again, I had a really good read on this. I felt very confident that we were in the process of moving higher, and we did ultimately, right? We actually just kind of walked as expected, from the area identified right here at about 79.80, right into this, overnight high here for about 50 ticks roughly. And in all fairness, of course, if somebody wanted to wait for the break of the VWAP and, test the VWAP or whatever, I'm not here to tout it. All right, 43 ticks roughly. This went in right here to the opening bell, and you can see that's where things kind of turned around. But really what we were targeting was this prior overnight high. And from this higher low, from this pullback, from the support at this pivot, the VWAP ended up helping us, not hurting us. We consolidated above it for a few candles, and we took a really great rally higher. So that's how we read crude oil this morning. I was fairly confident it was going to go lower on the day, but I was also fairly confident based on the price action, how the volume was reacting, that we were going to at least retest the overnight high or some layer of it before going lower on the day. So that's how that all kind of played out. So I'll dump the stuff off the screen just so it's clean for my traders in the morning if they want to refer back to it. That was there already. So that was trade number one. Okay. Trade number two. I don't want to call it my signature setup because I don't claim anything because I don't believe that I should be entitled to claiming anything. But this is the setup that I have founded helping folks in their trading career. And the reason for that is very simple. I found it to be the lowest risk and the highest probability setup for trading with the trend. Now, you have to be, more often than not, you have to be comfortable buying into, newly appointed highs or newly appointed lows, or approaching them. But here nor there, I have found that when I have two time frames favoring a move, two specific time frames, when my modified MACD is showing momentum, when my fast-moving averages are showing momentum, when my VWAPs are showing momentum, when strong volume is present, and I can identify either support or resistance depending on the direction of the trade, there's a fairly good chance that these trades tend to follow through. Gold's been in an absolute uptrend. If I pull back to Friday, just look at that thing. It absolutely ripped. The morning price action, the overnight price action sucked. And it did here as well. Look at how tight the price action is. It sucks. And I said that. Guys, listen. The price action on gold right now is awful. But if we are able to break out of this range-bound price action, gold has been tending to trend really well throughout the balance of the day or later in the afternoon. Well, this so happened to set up before the opening bell. I was able to identify it in real time, draw it out, and explain what exactly I saw, the risk associated with it, and the potential opportunity. So we get this really aggressive pop-up. I'm not a believer in buying, on aggression. I want to define support, which is defined by this line right here. I want to define either a pullback or consolidation, which is defined by this line right here. And then I want to find a low risk spot. So on this, probably risking coming under that breakout candle about 19 ticks. Okay. So that puts us right at the low here of this consolidation period, about 19, 20 ticks. Okay? I'm a little zoomed out, so it's extra sensitive, but somewhere right in that vicinity. And our first target was up here at 12, what number? Where are we at here? 13, 21.13. Okay. So that gave us, a fairly aggressive 120 ticks. Now, I mentioned a few things along the way. Number one, we had a prior pivot right here, okay, at 21.08. And we hit that during the opening bell. As the opening bell was transpiring, I said to my traders, I'm like, listen, it's not a bad idea. Take some short profits here at 21.08. Move your stop to break even. And as long as we continue to trend higher, we shouldn't return back to our entry. So we took some profits here at, right about the top of the opening range here, 21.08 and change. So still 70, 80 ticks, and then we pushed up a little bit higher into that next pivot. So we had a chance to pay and protect ourselves at a pivot from last week. We had a chance to pay ourselves more here, and I said to them, I'm like, listen, I would probably throw a target out here somewhere 120, 125, 130, wherever you feel comfortable, or just put it all the way up here at 130 where the next pivot is. I said, we may not get there though. We crossed a really large gap. The momentum's really strong. At some point, the buyers are going to run out of energy. So I left them with this. You should have paid yourself several times, right? 1, 2, 3 times you should have paid yourself. And I'll even throw the official kind of setup on here. I got to zoom it in so I can see it Nice and close. So the close of this candle was our trigger. The close is at 21.01. The low of the candle prior to it was at 20.99. Okay, so 21 ticks to be precise. Our first profit taking was at 2108.9, I believe, or 0.6. So roughly a 3.62 to 1. Our second profit taking was at 2112.9. So this is 5.62 to 1, and like I said, about 120 ticks. Then we bump out to target 3, 2117.5 for a 7.81 to 1 risk reward. Now, mind you, once we start taking profit at the opening bell, our stop was already at 0. So when I say risk, this was all reward and 0 risk at that point. And then ultimately, like I said, I told them somewhere between 120, 125 was probably not a terrible idea. So at 125, we were at 239 ticks. At 120, where were we? We were at 190 ticks roughly. But to the high for the session, from our low risk, high probability entry right there, it's what, 273 ticks for a 13 to 1 risk reward based on our initial entry, based on our initial risk that got completely taken away once we started taking profits here shortly after the opening bell. In fact, it was even before we took profits. As the opening bell hit, we moved our stop up just to make sure that we didn't get knocked out with a big opening range or crazy opening bell session. And there you have it, guys. I mean, the market ultimately then, I had drawn this later in the day, just, exhibiting that, hey, guys, listen, we're starting to break that weakness. You can see our fast-moving averages, broke a little bit. Our 3-minute MACD, modified MACD, really took a heavy turn. And our higher time frame MACD right here at 1:15 New York time, Eastern Standard Time, had broke as well. So plenty of signals here to have gotten out. I mean, even if we just used the break here, where does that put us? Like 125. That was the number I said, 125. So, in all fairness, we kind of worked out as planned, 239 ticks roughly. And it did its job, right? Like, you don't have to take a lot of these trades to be wildly successful and wildly profitable. And this is why I lean so heavily on this. Yes, I interpret the price action on all 4 of the markets we look at. Yes, just like the crude trade, I walk you through my thought process if I believe something's going to transpire, as it did. But my traders should all walk away, after trading with me for several months, to go, hey, I know exactly what I'm looking for. Multiple time frame confluence. I'm looking for my fast-moving averages to be all fanned out. I'm looking for price to be above them. I'm looking for my VWAPs to look a certain way. I'm looking for a strong presence of volume. Like, this should be like looking at the back of your hand. You could show me any chart with my indicators laid out on it, and I can tell you exactly where my setup is. And again, I'm not coining it as mine. I'm coining it as, this is the setup that I teach traders, because I believe this setup offers the highest probability of long-term success with the lowest probability of failure if you're disciplined enough to wait for it. The problem with most traders is they're not disciplined enough to wait. They're just too anxious to hit the buy or sell button. So I can't control that aspect, while I do talk about psychology and trading habits very much in depth throughout sessions. If you just stick to this one plan for the balance of your trading career, you took 2 to 3 trades per week roughly, and you had a low percentage of them actually work out, and you paid and protected yourself along the way I teach, you can be a profitable trader. So, hope this video was informational. If you enjoyed it, I'd appreciate a like. If you're enjoying the content I share, I appreciate a subscribe. My goal is to help traders overcome the failures and struggles that I have had throughout my trading career. God bless, guys. I'll see you in the next one.